I'm just going to assume everything's okay and get started. The Look at the euro just taking off here and hitting 120 on Draghi's comment. Um, just to the moon, right? Well, actually, it's really not that big of a move for an ECB Draghi speech, post ECB decision Draghi speech, I should say. We've seen a lot bigger, right? We've seen a lot bigger. So this is it's not small, but it's not big. Look at the fake out here. Look how it shoots down and then up. Really easy to get fooled, and interesting how that happens. So, first we go down below 119.40 and then up to 120.40. So really quick 100 pips, and now it appears to be fading. As it seems that we almost always overshoot on these moves. It almost always overshoots. And a couple three small bodied candles up here, big wicks, but small bodies. So there's a lot of volatility, but not a lot of progress once we get to a certain point. And so the euro reaching 120 really for the first time since, well, we did touch it the other day. We couldn't stay. We haven't really stayed up there in years. But the trend continues. I mean, you could just draw a trend line. It's pretty simple. A couple different trend lines you could draw, right? There's one of them. Look at that. That's just about as clean as can be. You cut right through the wicks, and it's crystal clear. 5 pips, right? So we've been saying that for a long time. Also on British pound as well. British pound has broken out of this symmetrical triangle and has hit 131 again. Symmetrical triangle is much more tricky, much trickier to trade, a lot tougher to deal with. But euro, that uptrend is just telling you which way to go. And traders just so often we outsmart ourselves trying to figure it out. Look at it. It's telling you which way to go. So what's Draghi been up to here? Well, he's definitely making the euro stronger, which is not something that generally you would think, that's not something he would really like. But let's take a look at some of the comments. He's taking Q&A right now, by the way, questions and answers, and well, he seems to call on the ladies quite a bit. There's definitely a lot more men than women in the audience, but he's always calling on the ladies. He says, I'm not going to comment on the exchange rate. He's going to let QE run out. His current plan is to let QE run out at the end of the year. Now we're getting kind of close. It's September now, so we're getting kind of close to the end of the year. That's kind of important. It's funny. Somebody asked if there were local bubbles. It's really not my fault. So he says, look, I'm a big picture guy. I'm not concerned if there's a local bubble somewhere. It's not my thing. So if there's, a small real estate bubble in some location, that's really not my problem. He says, look, we're not buying exactly $60 billion a month due to technical liquidity factors. In other words, there might not always be 60 billion a month in bonds available to buy of the type of bonds that he wants to buy, or they might not be readily available. He might not be able to buy 60 billion in bonds of the type of bonds that he wants to buy without wrecking the market, without driving the price through the roof. And if they can't get what they want without disrupting the market, they won't buy it. And for that reason, they're not buying exactly 60 billion a month. So that's why the question was, are you buying exactly 60 billion a month? The answer is no, because for technical reasons, it's not always possible. I thought that was very interesting. Let's see. Somebody asked, isn't it your job to provide clarity? And he said, wait for October. I'm not sure if that was a joke or not. Like, they're saying provide clarity, and he said, well, we'll provide more clarity later. I'm not sure if he was trying to be funny. Maybe some of this stuff loses in translation. All right. Listen, central bankers have a sense of humor. Right. He says exports are doing well, and of course that could certainly be in reference to Germany, the big exporter there. But listen, other countries also export. Growth is robust and broad-based. 6 million jobs created. Let's see what else he's saying. So he's saying there's less uncertainty. I think that's one thing that the euro really liked, is that less uncertainty. I see the euro starting to push a little bit higher again here. He says the risks are broadly balanced. That's another thing that investors like to hear, is that the risks are balanced, that there's no one area that's risky or more risky. Here's another thing that the euro really liked. The euro really shot when he said this. This was part of the prepared speech. Economic expansion stronger than expected. That was good to hear. Asset purchases to last until the end of the year or beyond if necessary. So this is something they've been saying all along. Look, we'll end QE at the end of the year, or we'll go beyond the end of the year if we feel that it's necessary. He says, look, we're flexible. And that's pretty much it. That's pretty much everything that was said. If I go to the 60-minute, how do you want to trade this? Do you want to live dangerously and try to short this for a short-term trade? It could work. But just be prepared to get the heck out if it goes against you. Just remember, you're going against the trend. You might say, well, Ed, it's stretched, it's overbought. Okay, I can accept that line of reasoning. Your stop should probably be above this high, so you take a very close stop. You put it up here. So your stop's above this line. Make it red. So if you were to sell short now, so he's still talking is the problem. But you never know. But if you're going to do like a short-term trade here, if you're going to fade this, if someone were to ask me right now, Ed, I'm thinking of shorting this. I think it's overextended. I think it's going to come back. I would put the stop up here. That doesn't mean I'm going to do that, because a lot of times when he finishes, the price then goes higher. You got to figure the shorts are getting hammered right now. How short is the market? I don't think the market is leaning short, but there's a way to find out. How do we find out? Let's go and take a look at the COT report. Right, today is Thursday. So a new COT report came out on Friday. We haven't looked at it yet. We like to look at futures only. So this is the futures market. There is no COT for the spot Forex market because nobody has that information. There's too many. There's 5 trillion a day traded there. Now, is the market short? No, the market is long, almost by 2 to 1. Right? I see 194,000 long contracts versus 107 short contracts. This is in the non-commercial area. Non-commercial meaning large speculators. How large are they? 194,000 contracts are held by 100 traders. That means the average position size is 19,000 contracts, and each contract is 125,000 euros. So, I'm sorry, did I say 19,000? 1,900. So think 2,000 contracts. Think 2,000 standard lots, right? So one standard lot is 100,000 US dollars, which is approximately 125,000 euros. So if you had, so that's approximately one standard lot is the contract size. If you have 194,000 contracts divided among 100 traders, that means 1,900 each. So imagine holding 1,900 standard lots. That's the average size. So some of them are holding larger size than that. Substantially larger, I would imagine. But the average trader here is holding 1,900 standard lots. Try to imagine holding 1,900 standard lots. I mean, one standard lot, okay, is $10 a pip. Okay? 10 standard lots is $100 a pip. 100 standard lots is $1,000 a pip. 1,000, is that right? $10 standard lots is $100 a pip. 100 standard lots is $1,000 a pip. A 1,000 standard lots would be 10,000 per pip. So 2,000 standard lots would be 20,000 per pip. These people are trading at 20,000 per pip. $20,000 per pip on average. 1,900 per pip, close enough. Try to imagine trading that large of a size. That's the size of the traders in here. They're huge. Smaller traders are over here, non-reportable. The non-reportable are also long by not quite 2 to 1, but the reportable are 2 to 1. So what's the whole point of this exercise? This is probably not short covering, but there are a substantial amount of shorts, and they're getting whacked, so there could be some short covering. If you're one of these folks, one of the 59 traders who are holding a total of 107,000 short contracts, how do you feel right now? How you feeling? Not good. Not good at all. And you're probably covering your short. And you're probably covering your short. Shorts are getting massacred right now in the euro. And It's not just Euro USD, it's Euro Pound as well. This is going to create some setups too, undoubtedly. Big spike in Euro Pound. Now on the daily, right, that's been trending lower, but that pushes back up. Interesting chart, though. This was running up the 10-day moving average for a while. Now it's trending downward, but this pushes it back up. Very interesting look to this chart. I'm not at all convinced that the uptrend is over. This could just be a dip and a resumption. Back to Euro USD, though. Back to the short term. 60-minute. So if I were short, my stop's above 120.70. This is starting to sink back down again. Go to the 5-minute. You can see it's starting to fade. It's okay to fade moves that are extreme. You just have to be ready to get out if the move goes against you. That's the key. Right? You want to go with trends, but sometimes the price explodes to the point where it's way overbought and it's and you're expecting a reversion to the mean. That doesn't mean that that once it reverts to the mean, then you want to resume trading with the trend. But this has gone far above the mean, and so I don't object to shorting something like that that's gone extremely far above the mean. Okay, all right. He's still talking. Man, that guy has a lot of energy. Well, he only started almost exactly an hour ago. He will probably continue for another less than a half hour, I would believe, for Q&A. It takes a lot of questions. This is it. He does this every 6 weeks. And it says here he's discussing various scenarios on QE, for potential scenarios on QE. As I look up at my television screen, they're asking him about how are you going to taper. A lot of different ways you could do that, right? But he doesn't want to nail himself down. Why? Because what if there's a problem? What if the economy, what if he doesn't want to commit to something? Because what if he wants to, what if the economy turns bad? Or what if there's an issue with Great Britain and Brexit that creates a problem? A lot of what ifs, a lot of potential problems. Okay. All right, let's get to some other charts here. So we'll let him go for now. S&P 500. We'll pull up the S&P futures. We're about to ring the bell here. A little bit of green on the screen here. There's that bell. And it's funny, like the tensions with North Korea, suddenly you're not hearing about it as much. And maybe things have calmed down a little bit. I don't know. It seems like the markets aren't too worried about North Korea as much all of a sudden. S&P still trying to crack 2480. We know that 2500 is on the other side of that. Huge psychological number. And a big churn going on here through July and August and now into September. The question in my mind is money changing hands from the professionals to the amateurs? Are the amateurs excited and buying in, and are the professionals getting out? I want to show you where the weakness lies. The interesting pockets of weakness. We know there are underlying strength in certain areas, but the airlines are hideous. Check out United Airlines. Look at that. That's awful. United. American. See the head and shoulders up top? Left, head, right, kaboom, down it goes, and it looks like it wants to go farther down. Southwest Airlines, symbol LUV. Breaking all support. JetBlue. Look at that. This is one after another of bear flags. Flagpole, flag, down. Flagpole, flag, down. Flagpole, flag, down. Flagpole, flag, down. About 4 bear flags on JetBlue. Save. That's Spirit Airlines. Greyhound with wings, we like to call it. A hideous chart. Horrific. Almost cut in half since the springtime. What is going on here? The airlines look horrible. The price of oil hasn't really gone up. What about this? Hotels now look like they want to join in. Watch this. IHG. Big double top. What about Priceline? Priceline.com. Head and shoulders with 2 left shoulders and a tiny little right shoulder, but nonetheless a head and shoulders. This stock has doubled since the beginning of 2016. So for some context there, it could really come unraveled. Expedia, same chart basically. Head and shoulders. Looks like it wants to go. Stock has doubled, or not quite doubled, but it had a big run since early 2016. A lot of stuff looks like it's just barely hanging on. Marriott. Big run, all of a sudden, lower highs, lower lows. Hyatt. Still grinding out the higher highs and higher lows, but I don't show it here, but it's barely hanging on to its 200-day moving average. This is a lower end hotel chain, Choice. It's not pretty, but it looks like either a double top or a head and shoulders or some sort of combination of both, but that's a topping pattern after a big run up, right? You can sort of imagine a neckline right there. If that breaks, it's big trouble. Call it a double top, a triple top, a head and shoulders. It's some sort of mutation combination of those patterns. Add it all up, there's something really wrong here with travel and leisure. Right? There's something really wrong. There's too many bad-looking charts in this sector where it looks to me like the whole sector's trying to collapse. The airlines have already collapsed. But now all the hotels look like they want to all jump off a cliff. And that's just not healthy. And I honestly could not tell you what the issue is here. I don't know what the problem is. But it's definitely a concern. Okay, because you can't really have it's something to do with the economy or some part of the economy. If people are not traveling, or if airlines can't make money, or if hotels are suddenly not being booked or airlines are not being booked, then there's something ominous about that. Okay, just keep that in your back pocket for later. Okay, bunch of economic statistics here. In addition to Mr. Draghi, this was the big surprise of the day. Was jobless claims. Look at this number. Looking for 241. It comes out at 298. Just keep in mind, this number is skewed by Hurricane Harvey, the huge hurricane that hit Texas last week threw this number off. This is not an accurate number. So I would disregard that. And keep in mind that the hurricane might throw some other numbers out of whack as well. So if you see some numbers that come in way off kilter, if you see some and you see the market react to those numbers, my first reaction is going to be, this number is not correct. I'm going to consider trading the other way, taking that trade the other way, assuming that the market is going to figure it out, that the number is wrong or the number is misleading. Okay? Because why? The number is wrong or misleading because it's being thrown off by this hurricane, this horrible disaster in the U.S. that has made it impossible to either correctly calculate the statistics temporarily, or it has just simply thrown these numbers off temporarily. Here's what I would expect from this jobless claims number. I think it'll throw those numbers off, and then next week you'll see like 150,000 or something like that, like something ridiculous, because it'll factor those numbers back the other way and even out. So next week it'll come out at 200,000, and it'll be evening itself out. Okay. As far as what we have coming up, oh, by the way, the building permits number in Canada, that was pretty bad, but I don't think anybody's worried about that right now. With 2 interest rate hikes in Canada in 2 months, and maybe more to come, Canada's economy growing at 4.5% interest. Coming up in 21 minutes, we have the Ivy Purchasing Managers Index in Canada, and we're looking for 61.3 for August for Canada. Crude oil inventories are coming up in the U.S. in an hour and 21 minutes. We'll have a speech from Dudley. Nobody's really worried about manufacturing in New Zealand. Why? Because New Zealand is not known for manufacturing. New Zealand is much more known for dairy exports. Okay. Dudley speaking in the U.S. this evening. Probably not a huge market mover. And GDP coming out of Japan tonight. Okay, could be a market mover. And I'll be back with you tomorrow. Right. Oh, we're going to get some data out of China tonight too. So that could be a big mover for what? That could be a big mover for the Australian dollar. That'll give us something to look at tonight, and it'll be tomorrow morning too when I'm back with you tomorrow. So I'll look forward to speaking with you then. So everybody have a wonderful day. I'll look forward to speaking with you again tomorrow. My name is Ed Ponzi. Euro's back under 120. So like I said, if you were to fade that move, that was not a bad idea, right? Not a bad idea to fade that move. It's now Euro now back under 120. Okay, I'm out of here, but I'll see you tomorrow. Everybody have a wonderful day. Thanks for listening. I'll see you again tomorrow. Have a great day.